Yeah, it's been a pretty interesting 96 hours, hasn't it? All eyes have been on the Evergrande situation, and with the debt markets pricing in a pretty high chance of default, markets reacted as you would expect. BTC and everything else sold off pretty hard. What I thought was interesting is at the peak of the volatility over the past couple of days, our institutional counterparty base was buying from us in BTC and ETH at a rate of about 2 to 1 in terms of notional value. So there seems to be a demand there that's willing to buy the dip. And I think as we saw more information coming out of China over the course of the past couple of days with the idea that they were going to help with restructuring of the Evergrande situation, we've seen a relief rally.
Yeah, I mean, crypto critics have pointed to the price action we've seen in things like Bitcoin and Ether earlier this week and said, see, look, it's not behaving. These are assets that are not behaving as flight to safety, given the fact that they too sold off. I wonder how you see it, because they're also instruments of leverage, and how has that played out in terms of some of the recent price action?
Yeah, we saw a lot of leverage come out of the system leading up to the Evergrande situation, I think totally unassociated with that. And as a result, what we saw mostly during the volatility was a price discovery process that was part risk takeoff and part accumulation over time. Now, while I think it's fair for critics to say that maybe it doesn't have the same volatility that other asset classes have, it's still an asset class that's in its infancy. And we've seen a slow decline in the overall realized volatility of the crypto asset class over the past couple of years. And there's no reason to believe that that won't continue as the market becomes more institutionalized.
Hey, Chris, there's been some discussion of Bitcoin futures this week back in backwardation. Unlike Ether, JP Morgan said that it points to much better institutional demand for Ether over Bitcoin. Are you seeing that kind of degradation in market share?
Not really. I think the reason why you might see some of those dynamics on the CME Bitcoin futures is it's one of the few places that large institutions has to express an opinion in some of these asset classes. And perhaps during the sell-off recently, they reduced their Bitcoin position that they've been carrying over the course of the past several months to a year, taking some profits and potentially rolling them into the Ethereum space, which, as I discussed previously, the layer 1 solutions in the smart contract space have been gaining a lot of attention. And if you're an organization that has a certain amount of dollars deployed to the crypto space, perhaps you want to rotate into ETH in order to get access to some of that layer 1 progress.
Now, I said we were going to touch on it. Let's touch on it, and that's regulation. I mean, we're just getting this news about potential nominations, comptroller of the currency, and possibly Professor Amarova to that position. I mean, in general, looking at some of the commentary and perhaps some of the personalities that are being fleshed out within this administration where cryptocurrency is concerned, I mean, arguably does raise a question about whether the dollar's supremacy is potentially being challenged by cryptocurrency. And if it is, or if at least there's a perception that it is, that could have wide-ranging impact on these regulations as they're developed.
Yeah, I think you're right. It's certainly natural to question any new innovation, and I would expect regulators, regardless of which aspect of the government they work for, to ask those questions about the risks that they might pose to the economy or to the markets. But at the same time, I think it's important that those regulators ask questions about how these innovations can actually help markets, how they could solve real problems. And I'm hopeful the new administration does exactly that, because we don't need to look far to find problems. Hyperinflation is a real issue that many people globally have to deal with. Maybe we don't have that problem in the United States, but you don't need to look far. Venezuela, Argentina, Turkey, these are all countries where the population is dramatically impacted by fiscal policy in a way they have no control over. You can wake up overnight and have no money in your bank account because of fiscal policy. And oftentimes that disproportionately impacts the lower income and lower saving population. So if something like cryptocurrencies offer this segment of the world an opportunity to diversify their risk and have a way to feed their family during periods of inflation that kind of is through the roof, I think we need to think about that. Now, it's maybe not the right place for the United States to start. We could start smaller. Stablecoins are a really fascinating development, and they could apply to some of the problems that we have in the United States.